Gary Black has projected the price of Tesla for 2030, which is very important for us Tesla bulls who want to know how many shares we'll need by then to be able to retire and enjoy Mike Ties in Honolulu. For all of us Tesla bulls, Gary's information is a huge eye-opener, and the more you delve into his model, the more unbelievable things become. In this video, I'll tell you why, despite initially appearing to be quite optimistic, Gary's model is actually far too conservative and doesn't account for all of Tesla's potential. It will take fewer shares to retire than his model predicts. Pay attention to learn why Tesla will truly double in age. Gary's forecasts. But before we go into the conversation, please give this video a thumbs up and subscribe, all you Tesla brothers. Together, let's take a look at Gary's top secret estimates of what Tesla will achieve by 2030. While we examine, remember the following important metrics. One, price for Tesla stock. The two criteria Gary looks for to make his projections are the Tesla delivery rate and the 3 EV adoption rate. Let's start with the big picture first. Tesla's stock value, Gary projects a modest $269 per share by 2030. But the narrative is much more complex than that. We'll revisit it after looking at the specifics and examining the second metric. By 2030, Gary anticipates that Tesla will have tripled its current annual delivery rate, or 10.8 million delivered vehicles annually. However, most of us know that Tesla can easily double that amount by 2030. Thus, this estimate is once more extremely conservative. Let's now discuss the most important factor, the EV adoption rate, which predicts how % of the car market will be electric by 2030. Gary projects that by 2030, there will be 54 million electric vehicles globally. Specifically, he states that 20 of the 54 million EVs that will be produced and delivered in 2023 will be Teslas. EV adoption increased from 3.4% in 2021 to 10 in 2022, 16 in 2023, 24 in 2024, and so on and so forth until 2030, when it will have reached 60%. According to his projection, Tesla will hold a 20% share of the worldwide EVs market. This number will not change between 2024 and 2030. However, it seems to me that Elon is not counting on owning just 20 of the market by 2030. He anticipates having much more power than that, and other Tesla bulls concur. I would place Teslas controlling 40 to 50% of the EV market instead. I know that new competitors rise along the way, but considering how EVs are currently being marketed, it's hard to think of a brand that comes close to Tesla. This is another area where I believe Gary Black is playing it extremely conservatively. In fact, I believe he may have been overly ambitious when he predicted that the average price of a Tesla would be $65,000. I understand that inflation may cause you to reevaluate what you consider to be a fair price for a car, but I believe Elon has been targeting a wider market, which includes middle-class consumers who are ready to spend little more than $40,000 for a car in addition. Gary has some lofty goals for Tesla's projected 32.8% gross margin in 2030. I hope he is correct in this assessment of the company's efficiency. Now, let's examine why some of Gary's projections are overly cautious. The model's primary flaw is that it ignores Tesla's active efforts in clean energy in favor of merely taking into account the company's car manufacturing. Automated taxation, although he is cautious in his calculations, owing to the limited scope of automobiles alone. The yearly growth rate of 47% forecast for Tesla bots and Tesla insurance is outstanding. However, you may have observed that the P represents a Tesla price of $269, with a P range of 61.2 in 2022 and 6.4 in 23. Of course, he isn't projecting that this will be the P for 2030. However, his Tesla price of $269 reflects the P even if 6.4p in 2030 doesn't seem plausible. Imagine, if you will, that by 2030 Tesla's stock price is $269 and its earnings per share are $42. That's how he's getting us to a price-to-earnings ratio of 6.4. We'll figure out the stock price later on or make an educated judgment based on his chart. Finally, I'll point out that Gary's model projects very good annual growth rates of 44 for EV adoption and 45 for deliveries. Now, let's base our own study on Gary's model. As we mentioned in the video, Gary's model only takes into account vehicles. The predicted price range for Tesla shares between 2022 and 2030 is wildly inflated. ranging from 269 to 270 per share. Another absurd aspect of the model is that by the time it ends in 2030, Gary Tesla will have 4.5 billion outstanding shares, having increased his share count by 14 from 3.1 billion to roughly 3.6 billion. The stock dilution strategy doesn't make sense, and I believe a significant buyback is imminent, which would actually direct Tesla toward issuing fewer outstanding shares rather than more stock. It just doesn't add up, right? If Tesla still needs to dilution in 2030 while generating over $200 billion in net income, that's absurd. They're just taking money away without any apparent reason. At $200 billion net incomes, they better be issuing buybacks instead of dilution. However, we must remember that this is only a prediction, and I can see that Gary Black is returning. Perhaps theory makes more sense, and we can see that the market cap is always increasing, but the stock price remains constant. Let's discuss a little bit more about the stock price. In 2030, the price is 269 once more, but it is only because of the peculiar manner he calculates P when a realistic P is used. Black's stock price projections begin to add up, for instance, when he projects a 69P for 2023. In other words, according to Gary Black, the stock could trade at a price target in 6 to 12 months that more than triples the current trading price of the stock, which isn't too bad at 69 pesos in 2023. Let's look at 2024 and use a P of 55, which is realistic given a market cap of $254 trillion. The price would be something like $632 per share, considering that Black has only taken into account Tesla's auto manufacturing. A market cap of $2.5 trillion with an annual pay of $45 billion are reasonable targets. So $632 per share in 2024 sounds pretty good right now in 2025. The one thing to bear in mind, though, regarding the share price in 2025 is that, according to Gary, Tesla's earnings are expected to soar from $46 billion to $66 billion in just 1 year, a $20 billion increase year over year. And that, given such a large increase, the P will undoubtedly decline. With this in mind, the P for 2025 is expected to be 45, which would put our stock price at $720 and nearly reach a $3 trillion market cap. Let's go on to 2026 now. For vehicles alone, I'm going to assign it a P of 40, which will give us a stock price of $832 per share in 3 years. An incredible 4x or 4.5x from now. Again, all of these calculations are trying to keep things conservative, so let's proceed to make it a little more realistic by adding FSD on top of this. In 2022, let's set an average of $12,500 for FSD vehicle costs because they are already increasing. Raised to $15,000 this month, and many bears believe that FSD won't be worth $29,000 in 2030. In 2020, the cost of a basic FSD was $8,000. The $8,000 that was initially allocated has been quadrupled to $15,000, though $15,000 is reasonable for Tesla. I'd estimate a double by the next few years and a quadrupling by the end of the decade. That being said, the data shows that a profit margin of 48 in sales of over $2.5 billion in FSD will grow by 2 annually. So we'll use that number in this chart to predict that the FSD profit margin will be over $1.2 billion. With an additional $2 billion, the net income will reach $15 billion or $303 per share with a P of 61. Therefore, if FSD is included, the stock price could rise dramatically, reaching $625 in 2023, $729 in 2024, $834 in 2025, and $972 in 2026. However, in 2030, when the company's stock price hits $12.82 and it's $4 each share by 2030, a 4-fold rise from where it is now. Based on a 25 price-to-earnings ratio, we included robo-assaults, Tesla insurance, FSD, and $230 to the share price by 2030. It's been a long one, but I hope this one was particularly educational. What do you think of Gary Black's analysis? Does it make sense to you? Please let us know in the comments below. We appreciate your time, and we'll see you in the next video.